everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and InsurTech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to anticipate what's next without losing sight of what's now. Stay tuned to find out your next now. Welcome, everybody, to the Future of Insurance podcast series from Majesco. Thrilled today to have Tony Liu, who's one of the co-founders of InsurTech New York, joining me today. Tony, welcome.
Thank you for having me, Denise. Really glad to be here and appreciate it.
So it's a small industry. It feels like it's a little community, but I find that some people don't always know everybody. So if you could give a little bit of background on yourself and your current focus at InsurTech New York and your upcoming conference, that would be great.
Sure, yes. I'm one of the co-founders of InsurTech New York. I started this community with my business partner, David Gritz, 2019. The reason why we started initially was we didn't see much of a community in New York for those in the insurance innovation space, like there were in the West Coast. Actually, I think the first time I met Denise was in Silicon Valley Insurance Accelerator.
Yeah, it was.
Yeah.
That's where you and I and David all originally met.
Exactly. And so I feel bad that they're not there anymore, but when they were, it was a great community and we kind of wanted to replicate that in the East Coast. That's kind of the main reason we started it. And then there was a need and demand for this community in New York. And so we kind of expanded from there, from initially hosting small events to now doing a few different things. I can give you a quick overview. So one thing we still do is we still host small events, but we also host a 1,000-person annual conference called InsurTech Spring Conference in New York. It's March 30, 31st this year. We also run different startup programs and education programs for carriers and brokers. And we also find and scout startups for them. And we kind of call that insurance innovation program, corporate innovation program for carriers and brokers. So we have that. We also run an accelerator called MGA Lab, where we help create new MGA businesses working with different founders. And then finally, we have a venture capital fund that we started a few years ago after seeing many early stage startups kind of needing more capital and thought we could actually support them. We decided to start a fund and have been making investments since 2022. So yeah, that's kind of in a nutshell what we do. So we do a lot of different things. They all help each other out, support each other, but all in the insurance innovation space.
From when you and I met back at the start of InsurTech, and SVIA was involved in that.
Yeah.
We're now, I believe, as you and I talked ahead of time, really approaching a new phase after a decade of a lot of growth and a lot of investment, a lot of ups and downs, some wins, some not wins, all of the things that kind of go with it. How has it changed over the last 10 years to what it is today, and what defines a good investment today?
Sure. I'm guessing you're asking about InsurTech. I got into InsurTech in like 2018, 19. And back then, there was certainly a lot of hype of InsurTech. It was before Lemonades of the world went public. A lot of hype and just talking to a lot of the contacts and carrier leaders that have gotten to know and the journey they went through. There was a bit of fear actually from like carrier side and broker side that InsurTech could actually, overtake them. So that's one of the messages Lemonade actually like share with everyone. It's like, oh, we're going to take over, like we're going to put you down. And so there was a bit of fear and also a little bit of envy. And I think by the time the 2019 came along, that kind of envy and fear started to kind of come down because they weren't really like taking them over. In fact, one of the big fear was agents and brokers would go away because everything will be sold digitally.
Oh, yeah.
Yeah. And
they're still here and strong.
Yeah, they're exactly. I mean, in fact, they're probably making more money than carriers are and they're continue to grow. So that's not going away. So that fear was there. And then it kind of like, I think by 2019, 2020, that fear had kind of subsided. And then kind of move forward, 2020, 2021, some of the, Lemonade, Hippos of the world went public, super hype, a lot of money being poured in, not just from InsurTech investors, but from like tourist investors or those not in the insurance world, and they're just putting a lot of money in. Lo and behold, they didn't do as well as they claimed that they would, right? And especially like, I think they realize selling insurance is different from selling cupcakes or any kind of digital software. You need
Hmm.
to think about risk and there's regulated, right? And you can't like there's a limitation on how much profit you can make. It's different. And you can't just expect you put marketing dollars in and then you get more revenue and that's not it. You got to think about loss ratio, right? And
Yeah.
so that really like brought the stocks of kind of the big insurtechs down. And then they actually kind of like made the insurtech asset class to be less sexy. It was very sexy and it got less sexy. So like a lot of the tourist money kind of went out and then the valuation came down. So actually, this is when we started investing and we actually like investing in this stage because all the fluff was kind of gone. And real founders who really wanted to solve insurance kind of problems, who had understanding of insurance, they started coming in and starting new startups. And the valuation was right from an investment perspective. And they're solving real problems. And that's kind of like where we are now, where we see a lot of good companies who are founded by people who understand insurance and are solving real problems and really helping the industry.
It's been a little bit of a challenge the last few years just because of the high interest rates,
Yeah.
obviously, at finding capital come in to kind of invest in some of these startups or continue investing in some that aren't quite profitable or very little profitability. Where do you see the focus of investments over the next year are going to be focused on that are of real interest that you guys are looking at?
Yeah, so we kind of divide up the insurtechs into two different categories. One of them are like vendors. Majesco, when it was not a startup, right? We'll put you under that category, right? They help incumbent carriers and brokers be more productive, more efficient. So that's like a vendor category. And then we also have sort of the distribution category. They're MGAs or marketplace or broker, those type of companies. And so, we kind of divide them up. So within the vendor space, we like tech companies that support the brokers and agents. And
Hmm.
the reason being, and this is from early stage investment perspective. From early stage perspective, if a company is super early, it's really difficult for them to sell into carriers takes them a very long time. And obviously, their carriers have a big need and also bigger budget. And so, obviously, if you can land a few of them, it's great financially, but it just takes them a bit of time, maybe sometimes many years. And so, if they have a good technology, they could potentially help brokers and agents. The go-to-market can be a lot faster. And so we do like broker tech companies from like an early stage investment perspective. That's why we invested in, I think, almost 10 companies in that space. And sometimes as they grow and mature, they kind of move into the carrier space. And it's a bit easier for them to do that because they have established product, they pass different security protocols and they have time. They don't have to like, sometimes if you're a carrier tech and you don't have revenue for 2 years, which can happen, then you kind of go, you have to belly up, right? But whereas if
Yep.
you're a broker tech, you have revenue, you can kind of sustain it. So we like that. And then on the distribution side, we love MGAs. That's why we even created an accelerator for MGAs. And so there's a lot of opportunity in MGA space, small commercial, especially, I think it will be great. But there's still like opportunity in the digital distribution space. And
Uh-huh.
so some brokers who are focused on that or like marketplace, I think is also an area that I think could be interesting. I think with the AI becoming more and more mature, AI who can communicate, have conversations, I think we'll see more digital distribution there's some even companies like one man AI shop that's like basically selling thousands of policies. So we see a couple of those companies as well.
Okay, great.
Yeah.
In this kind of new era, I kind of define we're entering this new era of insurance. It's really about intelligent insurance, and it's really driven by all of the potential and the activities around AI that truly is going to have a profound impact on business operating models and the financial metrics that insurers and MGAs operate under from the combined ratio and expense ratio aspect that
Yeah.
ultimately will make their products more competitive and hopefully stronger growth. When I look at Gen AI and now Agentic AI and how they're revolutionizing the operations processes across industries, they're really redefining what's possible in terms of speed, scale, efficiencies, and strategic decision making. What are you seeing with InsurTechs you're working with and how they're using GenAI and Agentic AI?
Yeah, so there's definitely a lot of use cases for both. Agentic AI leverages generative AI, but it is a bit different. And we are seeing different types of kind of use cases. So initially, when we first saw generative AI, we saw it being used for companies wanting their either their employees or their customers to get access to their information. So for example, if someone calls carrier's customer service to ask about their policy information, the customer rep might be able to just search their, ChatGPT like interface to get information about their policyholder. And so it's more like helping them. It's like a knowledge management system, right? So that allows them to actually access a lot of the data that was kind of hard to access before. Now, like with
Uh-huh.
the GenAI, they can access it. So a lot of use cases there. Some offer that kind of service to customers directly. Some kind of was just using it internally. Or yeah, so we saw a lot of that. We also saw Gen AI being used to help extract information from unstructured data, whether it's policy forms in the kind of the distribution space or in the claims area. So we saw a lot of that as well. And then with the agentic AI, we're seeing they go a little beyond that and actually automating the workflow process. So let's say, customer service gets an email from a customer and they'll be asking all kinds of different questions. A company could actually figure out what questions is being asked, categorize it differently, and then start different workflows that automatically address the question being asked or actually take action on whatever is being asked. And so like it actually does all the work for you without a human intervention. Or they could like ping the human to be part of the workflow. So like humans are actually part of the agentic workflow as well, right? And so
Yeah.
that we have seen some of those use cases, and I think that's kind of the big lift that is happening right now because insurance is like so workflow dependent. There's so many steps in everything,
Yeah.
and agentic AI can actually automate a lot of those things.
So one of the
Yeah,
things you and I talked
yeah, yeah,
about is one-off AI capabilities and how
yeah,
they
yeah.
don't address full rethinking
Right.
of an operating model
Yeah,
or how you can change the processes and really impact the expense ratios. What
yeah.
guidance are you giving to those insurtechs you're working with focused on AI, not to kind of take the quick one-off type of approach?
Take a step back here. So when it comes to AI technology, I mean, obviously there's like hardware, which we're gonna skip, right? But then above the hardware level, there is like foundational LLM, right? Like OpenAI,
Yep.
Anthropic, these guys, right? And there's some insurtechs that also have foundational element as well. And so these guys potentially could do everything. Like if you go to ChatGPT now, they have different apps that you can use. You can even do agentic stuff in OpenAI. And so the begs a question like what can actually insurtechs do? Are they gonna be basically overtaken by OpenAIs of the world? I think that the answer to that is maybe like in 10 years, who knows, but I think foreseeable future, I don't think that's going to be the case. And I was in an event where it was a guy from OpenAI. He was responsible for startup partnership and
Uh-huh.
he used to be an investor. And so he kind of has this investment. And as somebody asked, and that's a question I also wanted to ask, if you were investing now, like who would you invest in, right? And he said he would invest in companies who have vertical knowledge and is able to apply that knowledge and leverage their OpenAI technology. And
Okay.
that's basically what insurtechs are. And like a lot of the insurtech founders have the insurance knowledge and they can leverage OpenAI type of technology and apply it because it's difficult for companies like OpenAI to gain that insurance knowledge to be able to make it really applicable. They have like general knowledge. So like if you wanted to do loss runs, extract it from all kinds of different PDFs, if you gave it to OpenAI, they might be okay, maybe like 60% accuracy, but you still need somebody with the knowledge to tweak it, make it like really good. That's what like insurtechs can do is they can leverage the knowledge they have in the domain and then really like make it work. And also, and you know these things. carriers, also brokers.
Yeah.
Insurance is all about, it's like human-based community, right? And
Yeah.
company. And so you need to get to know the people and understand their needs. And it's not just a technology problem. A lot of it is like process problem,
Hmm.
human problem. And technology like OpenAI alone will definitely not be able to solve it anytime soon.
I was just talking to somebody and they were thinking about, oh, I can apply AI to kind of my existing kind of legacy operating model and processes and kind of the to some extent the legacy tech.
Yeah.
And I said that's like paving the cow path. When we
Yeah.
were kind of moving to cloud or we were moving to a modern system, why do you want to do that when you may not even need that path? And they just kind of sat back and went, huh, I hadn't thought about that. That's
Yeah.
where we kind of created a lot of extra cost in our organizations because we just kind of kept layering tech on existing stuff that we never sat back and questioned, should we even be doing that?
Sure. Yeah, that happens. Like next type, let's do blockchain. And then, I think some carriers like started looking into it and they realized, oh, this is not going to work. But there are definitely some carriers like, oh, let's do OpenAI, let's do a partnership with them. And I think it could work for them, but it remains to be seen if it's right.
Yeah. As we're talking about InsurTech, and when it first started, it was always about the VC-backed guys or the new tech companies that were starting or MGAs or insurers. Now, InsurTech really kind of encompasses the broad spectrum of a technology companies, some that have been established for some time that weren't not necessarily just startups in the last 10 years. And one of the trends I talk about in my trends report for 2026 is InsurTech zombies. And it can be financially strapped, private equity owned insurtechs to private equity owned, insurtechs that have lots of roll ups that they can't really invest in all of it. They've got VC backed insurtechs that they blew through the money and aren't
Mhm.
really profitable, and it's hard to kind of continue investing in them.
Yeah,
Then
yeah.
we've got some, founder-owned, privately held insurtechs that have been around for a few decades. And all of these companies are going to struggle finding the cash, finding the capital to do R&D to be able to invest in the technology, let alone AI. And
Yeah.
not just the AI tech, but the people that you're going to need to build the large language models and to do all the stuff you need. So, how do you think all of this kind of fits in how you provide guidance to your insurtechs that they don't become one of those insurtech zombies?
Frankly, right, if you're a startup founder, I think you believe that you will succeed like, 100% of the time, but chances are you will fail. This is
The
just
stats,
pure,
just the
pure
statistics
stats.
alone.
Chances are you'll fail. Like more than I think like 70% of startups fail. So
Yeah.
just I think acknowledge that. Honestly, if you're a insurtech zombie, you're better positioned than, than many others because they didn't even make it past their first or second year. But yeah, you don't want to be a zombie either. And I think the few different companies you mentioned, I think it's a little bit different though. So if it's a founder-led company, maybe they were bootstrapping it for years and they have customers and revenue. There are definitely a few companies like that we
Mhm.
meet, and they might be okay. Maybe they're generating profit, right? And they're paying themselves. And yes, they can't use the latest technology to upgrade them, but maybe they can with the, AI costs going down. And so some of them are trying to hang in there. I mean, the reason why they're still around is they have customers that are paying them money. And good thing about not being venture backed or private equity backed is you don't have to keep growing. It's okay. Yeah,
Yeah, but we have a lot of legacy tech that have lots of customers. It's running the business, but
yeah,
it's
yeah.
really hard to apply this other new tech to it because you can't get
Exactly.
access to the data.
Exactly. So it sucks for like, like high tech companies like you guys to kind of work with them. But I guess from these startup they're not a startup anymore. I guess like lifestyle business tech companies, they're probably just continue running it until he or she, the founder, wants to retire, and then that's okay with them. So it's just a lifestyle business. I can't really like tell them you're doing it wrong. Like they're able to pay them bills and take care of their family. So I think definitely a few out there like that. And then there's also those who are sort of just like hanging in there and like barely making ends meet. They're maybe backed by a venture, but then they're running out of money. And for those, they will eventually run out of money and then shut down. Or both cases, the lifestyle business and then the venture backed ones that are sort of like hanging in there. Actually, these are great opportunities for acquisition by Majesco, for example, right?
Mhm.
I think those are the best because they have some product typically. They have something like technology that they had created, put a lot of money into, sometimes millions of dollars, right? By these investors pay for them. And so now you can buy them at like 500K and like amazing, right? So I think, or maybe they have relationship with customers, so you can just acquire them at a very low cost. So these are really good value acquisitions. Like,
I was having a conversation with a CEO of a P&C insurer a couple of days ago, and I just saw the Travelers article about the Travelers earnings for the end of the year. And in both of those conversations, it kind of relate in that, the impact of AI and what it's going to do for the driving down the expense ratio and ultimately the combined ratio, and then being able to address the protection gap out there. In this conversation I was having with the CEO, he believes very strongly that over the next 3 to 5 years, those that are investing in it are going to get so competitive that it's going to change the dynamics of who's going to be really leading and competitive in the marketplace with their products, because they're
yeah.
going to be able to create that level of operational efficiencies that are really going to differentiate them in the market. So I think, from a zombie standpoint, while you may have companies that have a good technology, if they're not investing in that, they're holding you back to be able to compete with those that are going to be doing something around AI, because the gap is going to become bigger and bigger in how you can price the products then.
Yeah, that's a great point. By the way, in terms of some of these zombies, they might be a zombie or they're just like in the early stage, they got investment.
Yeah.
And what we're seeing is some of them are pivoting and now they're leveraging agentic AI.
Yep.
And I forget the company name and they were doing something completely different. And I talked to them and they're like, oh, we're agentic AI workflow automation company, which
Hmm.
there's like 200 of them, but that's
Yeah.
they're doing that, right? So, but they're doing that because what they said, for example, this person in Travelers Earning Call said, by the way, this is repeated by AIG, Chubb. I don't know if they publicly said it, but I know all these companies have many AI engineers, data people. And if you look at their job openings, there's a lot of them, like hundreds of job openings, like with the word AI and data in it. And so, and my understanding is they're leveraging it in like risk selection and underwriting, which was like a area that it was, restricted. Like insurtechs weren't allowed in that space. They were like, hey, this is our secret sauce. We don't want vendors coming into this space. But now they're really opening that up. And in fact, they're not just using vendors, but actually they're creating their own, intellectual property, hiring their engineers to actually do the work themselves.
Yeah.
So yeah, I think that's definitely going to be the case.
Obviously, this next wave, we're really focused on AI. Do you see a new wave of innovation and any areas specifically that some of your startups might be focused on, particularly in the MGA space?
Yeah, so we might see some companies who are basically like doing digital distribution with like one person. It's like basically an AI-based agency, right?
Okay.
I think we'll see some of those come up and be successful.
Interesting.
Yeah, so I already talked to two companies just in the past few weeks, and they're generating, close to million in premium, and they're just been out for a few months, right? And so I think we'll see more of that coming up. And then I think in the MJ space, it's still going to continue to be companies who are finding niche areas that either is sort of new because it just didn't exist, or were neglected by the incumbents. So like,
Hmm.
property in California, Florida,
Yeah.
etc. So I think those are the areas that we look for. It's obviously like parametric is still, it's not new anymore, but it's still newish and we still
I think
see
it's getting more interest.
yeah, I think it's become more mainstream now. So
Yeah.
I think we see more opportunity there. That's kind of the area we look for. And yeah, I think agentic is interesting. We'll probably see some winners in this space. It's like not everybody can be the agentic vendor. I think there's going to be few who are going to be kind of the winners in this space. So it'll be kind of interesting to see who that would be. And then I was just talking to two of our carrier members in our community. Both of them were interested in like quantum computing. So I'm still not sure what the use case is for that for insurance, but that's something that we'll probably be monitoring for some time. It's just going to make everything faster and be able
Yeah.
to basically do risk selection, everything like very to the nth degree. And then there's going to be security risk because apparently with quantum computing, you can decode any kind of passcode like instantly. And so
Oh, wow.
there's risk there. And every time there's risk, there's insurance play, right? So we'll see how that gets managed.
Well, it's been a great conversation, Tony. I'd like to leave with this one question I ask everybody. If you could pick one word to describe the future of insurance, what would it be and why?
I think exciting. I'm excited about the new world and what it can do for the community. One reason that David and I decided to focus on insurance, besides the fact that, we already have connection and things like that. But one reason we really like being part of this industry is insurance is like a noble industry. It's more
Mhm.
insurance is actually helpful for the world. That's what our
Mhm.
belief is. And of course, I'm not saying experience from the customer's perspective has been great, but these are the areas that technology really can help those who are neglected by like bigger companies because maybe they're too small or what have you. Now with the technology, it's more scalable and they'll get access to insurance that maybe weren't available to them. So it gives more access to people and companies. And I think that's a great thing. And we're going to continue to improve our customer service and process. So yeah, I'm excited about the prospect of technology, what they'll do for the industry.
Well, thanks, Tony. It's been a great conversation. Wish you and David great success on the next event in March. And I know either myself and or somebody else will be there to join everybody. So looking forward to it.
Great. Yeah, I look forward to seeing you, Denise, and your team. Just as a reminder, the spring conference is in New York, March 30, 31st. And you can come to our website to get information, insurtechny.com.
Great. Thanks, Tony.
Thank you, Denise.
That's it for this week's episode of Future of Insurance Industry Leaders podcast. Subscribe to our market leading podcast series available wherever you get your podcast from. Thank you for listening and be sure to tune in the next time.